Hey guys, I'm super excited about today's video. So we are gonna go through my portfolio as a 29-year-old entrepreneur. This is probably the question I get the most on social media. I provide a lot of financial literacy content and people will always ask me, what are you invested in? So we're gonna go through all of it, from stocks to crypto to real estate to cash, what my mantra is, what my frame of mind is, if you would, around some of these investments. But there's a couple things I wanna say first. First, I actually don't think my portfolio is the perfect mix. My portfolio is perfect for me. I'll jump into this why a little bit later. But if someone brought me a portfolio and said, here's my portfolio, and I was looking at mine, I would actually critique this quite a bit. So I'm gonna tell you what I would critique, how I'd critique, and what I would change in my own personal portfolio, and we'll kind of walk through it. So before we jump into the investments, I am inside the mortgage industry. That's my daily job. That's what I do 40 hours a week. I create content on the side. I love creating content and financial literacy. We have education companies, marketing companies, but the majority of my effort, expertise, and education is inside the real estate market. Because of that, I am very heavily weighted in real estate. So I'm going to talk through my real estate holdings, how I got started, and all that kind of stuff, and I'll give you percentages. But I just want to preface that because no matter where you are in your investing career, I honestly think that your profession is where you should do the most investing. That is where you have a leg up above everyone else. If you are inside medical sales, you've done it for 20 years, and you hear that this other medical company is killing it, and you've heard this because you're getting killed by that medical sales company, go invest in them. You know what I mean? Like, you have knowledge that other people don't have, and that is where you should be investing. If you know tech or AI or whatever it is, your knowledge inside of your data job can lead to a better option or better opinion on what to invest in that other people just don't have. So I'm in mortgages. I have a lot of real estate. So let's walk through it. First and foremost, 20% of my net worth is what I'm going to put inside of liquid assets. Inside liquid assets, I'm going to call this stocks, crypto, cash, and anything that I can get access to within a 72-hour period. 80% of my net worth is inside of real estate. Okay. So it's about a 20-80 split. And I'll walk through the subsections of each of those and why I do it. I'm about a 20-80 split. For the sake of the video, I'm not include any equity inside companies that I own. One, because they're not publicly traded. If I can't liquidate it, who's going to say what the price is? I can go out there and inflate some value that I think will make my ego feel really good, but it doesn't do anything for the video. It doesn't apply. So we're not even going to talk about that portion. We're just going to talk about the stuff that applies to you guys so you can see how my portfolio is broken down outside of the businesses that I own. First, let's go liquid investments. Inside of my liquid investments, I have about 5 to 8% of cash right now. So of the total liquid investments, 8% of it is cash. About 40% of it is inside of cryptocurrency, and about 50 to 52% is inside of stocks. Of the stocks, I would say half of it is inside of 401k or IRA, and the other half is just inside a brokerage account that I can have access to. My whole frame of mind on stocks, a lot of you are going to ask, are you day trading? Are you swinging stocks? What are you doing with stocks? What are you invested in? Inside the stock market, almost everything I have is inside VTI, VOO, VTSAX, and VUG. Those are the 4 index funds that the majority of my stocks and my investments are in. The reason is I love day trading. Okay. Day trading to me is almost like my form of gambling. It's fun. You can educate yourself on it. There's an exhilaration side of it. I did it all the time in college. I don't do it anymore for a couple reasons. The first one, it takes a lot of time to really study and know how to day trade and swing trade. I just don't have that time anymore. The other thing, I don't want very much money in the stock market. What the stock market is for me is it's a liquidity pull against my debt. When you hear that I have 80% of my net worth inside of real estate, I'll let you guys kind of guess what that dollar value is, but it's we are over 7 and 8 figures. Okay. We are having a lot of debt. When you talk about my company's debt, like we're buying apartment complexes with 200, 300 unit apartment complexes. That's a lot of debt that takes that on. My goal with any investment is that I can cover all my debt payments, all my mortgage payments for 2 years with no income coming in. So I add up this fourplex and my personal home and this apartment complex. I add up all those payments, multiply that by 24 months. And that's what I'm going to have in the stock market. This is my safety blanket. I know I'm a business owner. I'm high risk. I have a ton of debt. So I want the safety blanket so that I can sleep at night and know that if everything hits the fan, I don't have income for 2 years, I can make it by. That is what stocks is for me. That's all it is for me. Because of that, I want it well diversified across the portfolio, earning me 8 to 10% a year. And I'm going to put it in VTI, total market indexes, S&P 500s, and some growth stocks, VUG. That is my stock market portfolio. It's a little boring, but I think it's the most tried and true method. And for the majority of people, I think it's a very smart way to run your stocks. The next part, cryptocurrency. This is 40% of my portfolio of liquid cash, okay? I believe in it. We're going to talk about those percentages, but I did get in pretty early, okay? I was buying my first crypto almost 10 years ago, which is mind-blowing when you really think about it. I was back in 2015. I was buying and selling cryptocurrency. I remember sitting in my finance classes in college, not listening at all, sitting there day trading crypto because I thought it was really fun and I got an exhilaration from it. Because of that, I have a lot of crypto holdings. I got lucky, if you would, inside that investment. I think every single generation has their opportunity for massive investment. If I was to go back to like my great grandfather, his opportunity was land. Okay. You could buy raw land, 40 acres at a time for pennies on the dollar. It was awesome. We're going to fast forward to the next generation. I would say it was land with a home on it. It was real estate. They were picking up homes for like $15,000, $20,000, $10,000. That was an amazing deal because homes were getting built extremely quickly. The next one, I would say my parents, they had the opportunity of the tech boom. The 2000 tech boom was unprecedented. Amazon went down 97% in 2002 before it rebounded, which one, there's a lesson on leadership there and business acumen, but it went down 97% and they had the opportunity of a lifetime to buy these tech stocks that turned into trillion-dollar companies. And it was absolutely insane what they can do. Today's, in my opinion, is cryptocurrency. That is our frontier investment where you can go get thousands and thousands of percent return. I got really lucky, got really early. We are still very early in adoption. There are 21 million Bitcoin that will ever exist. You cannot print more Bitcoin like we print more money. Now, I think there's like 40 million millionaires in the world. Every millionaire can't own a whole Bitcoin. That's pretty crazy to think about. And you have the opportunity to go try to acquire that. So remember, I got pretty early into crypto. It's going to be hard to make or meet my percentages inside your net worth inside of cryptocurrency because of that, but it's something worth trying. It is the only asset class, in my opinion, that has the ability to take you out of the middle class. Let's say you put $5,000, you're nearing retirement, you have $250,000 in your investments, you put $5,000 in there. In the next 20 years, if cryptocurrency can do what it says it's going to do, I mean, Michael Saylor, I'm pretty sure said that cryptocurrency mid case is 13 million, high case was like 40 million. If a single Bitcoin can be 40 million, you put $5,000 in it today, that has the option to turn you into a millionaire just with a $5,000 investment. Sounds crazy, is a little bit crazy, but at the same time, if that happens, that is absolutely insane and will change your life. But $5,000 out of your $250,000 portfolio is not going to change your life if you lose it. That is a good risk to reward, in my opinion. That's why I think everyone should have it, because if it can fulfill it, has the power to change your life and pull you out of the middle class, unlike any other asset. You're not going to get that in the S&P 500. It's the slow and steady way to get to retirement, but it's not going to change your life with a single investment. So I think everyone should have some cryptocurrency. I have a lot more. What's funny is 24 months ago, this whole 100%, I was 90% stock, 10% crypto. I am slowly moving a lot of my stock over to crypto because I love it. I think it's a great liquid asset, and that's where I'm putting a lot of it. With that said, I always have enough cash for 6 months reserves of everything that I need to own. This is going to make up between 5 and 8% for me of my total net worth right now. I'm going to put that in cash. It's sitting inside a high yield savings account. I never look at it, never touch it, never trade it, never do anything with it. It's just going to sit there and keep up with inflation so that if a rainy day comes, if an expense comes that I'm not planned for, I have the money, can pull it and pay for it. And that is my liquid portfolio. You will notice I don't have any gold. I don't have any bonds. I don't have any CDs. I don't have any treasury bills. I don't have any of that stuff because those investments, their job is to keep up with inflation. If you're just keeping up with inflation, that's not an investment. Your money is not growing. I firmly believe that over the course of the next 20, 30, 40 years, I want growth in my assets. I ran a simulation the other day. I'm trying to remember the numbers I had. Don't hold me to these numbers, but it was something in the effect that what if I had $1 million invested and I had that for 20 years at an 8% return? At the end of that 20 years, I think it turned into like $3 or $4 million. Then I took the same $1 million for the same 20 years, but instead of an 8% return, I got an 18% return. That turned into like $39 million. When compound returns are on your side, it's exponential growth. And that's why a lot of my portfolio, we're going to talk about this quite a bit, is stock market is there as my safety blanket for a doomsday. It is not there to earn my money for returns. If I can get you guys, if you can take one thing from my entire channel and everything I say, is stop trying to keep up with inflation. The idea that a 401k is going to get to you to retirement, yeah, it can get you there, but to actually enjoy your retirement, you need to figure out how to get from an 8% return to a 12% return, or an 8% to return to a 15% return, because those little percentages make a massive change to the quality of life you will have, and they're out there. You just have to go find them. So that is my stocks. That is my crypto. That is my cash. That makes up all liquid assets. And that bucket, if you would, is 20% of my total net worth outside of equities inside of businesses. Now, let's jump into real estate. I'm going to break apart real estate as well. Real estate, in my opinion, is one of the greatest investments for most people. We've already talked about crypto. I firmly believe in it. Real estate changed my life. When I just got in the industry, I bought a home. This was only like 4 or 5 years ago, which is pretty crazy. The home at the time, I think I purchased it for $285,000. I put like 15 grand into it, fixing it up. I added a bedroom, all that kind of stuff. I still own that home today. I bet you it could sell for $500,000. At the time, I put 3% down because it was a conventional loan. I was a first-time home buyer. Well, if you're a first-time home buyer, you qualify for that. Reach out for mortgage questions as always, but put 3% down on 285, I think. I put $9,000 on a home, and over the course of 4 years, made $200,000. Think about the return on that. That is a 2,000% return on my money over that 4 years. That is crazy. People will look at the inflation of real estate, it's 4 or 5%, but that's 4 or 5% of the total asset. When you do 4 or 5% of the total asset, but you're only putting 3 or 5 or 10 or 20% down, that exponentially maximizes your returns and makes it so you have legitimate money. Now, if you can do that every year or every 2 years, if you can save $10,000 every year or $10,000 every 2 years and just trade up the homes and then rent the one as you move out because you're saving that down payment, that ability to earn 100,000 here and 100,000 here and 100,000 there, home after home, yeah, it takes 10, 15, 20 years, but you'll have millions and millions of dollars of real estate at the end. I get this is hard, okay? I get you're gonna have to raise your income. I am not ignorant to the fact that what I just said is very difficult to actually achieve, but it is achievable. So that's how I got into real estate, with just my personal home. Then I started buying other single family homes, fourplexes, single family homes. I tried to do an Airbnb one time with 10% down, didn't go well, but we flipped it to a long term. And I just started buying up little single family homes. The single family homes that I own, well, I'm not including my primary home because that's a liability. It's not an asset. It's not making money. It's taking money. Okay. The single family homes that I own make up about 30%. It's 28% of my real estate portfolio. Anything from 1 to 4 units. Next, probably 40 to 50% is inside of syndications. Syndications are an amazing investment that a lot of you don't know about, and I think everyone should know about it. What a syndication is it's the act of bringing a bunch of people together to source a down payment on a larger asset and purchasing that asset together. I'm going to give you 3 reasons why I think this is better than like the single family homes or duplexes or fourplexes. First reason is the appreciation you can get in an apartment complex of that size is so much better than a single family home. With a single family home, when you buy a single family home, the way that an appraiser will value that home is they look at all the comps around you, what they sell, and they derive a value. So if your neighbor had an identical home and it sold 2 weeks ago, your home is going to be valued that one is. Okay. An appraiser dictates the value. The market dictates the value. In an apartment complex, once you get over probably 20 or 30 units, it no longer matters the comps in your area. It runs like a business and is valued like a business. So what this means is the NOI, the net operating income, the very bottom line, whatever that is, they apply a multiple to it. Let's say a 20 times multiple to it. That multiple is how much your property is going to be worth. So let's say that you own a 200 unit apartment complex and the NOI, the net operating income, is $1 million. That $1 million means your property is going to be worth 20 million bucks. But what's awesome is, let's say you walk in there and you are paying all the utilities for your tenants. Okay. This was a mom and pop shop. Some older couple own this. They've owned it for 40 years and they've just been covering the utilities. You roll out a utility share program where everyone is now pitching in to cover their gas, their electric, their garbage. It's very normal in the apartment world. And they give you an extra $100 to cover their utilities. That $100 flows right to the bottom line. There are no costs that it's going to take out. That $100 will take you from $1 million to $2 million of net operating income within 30 days. Now you get the same 20 times multiple, but now you have a $2 million NOI. So now your building's worth $40 million. You just created $20 million in 30 days. Now, that may be a little bit of an extreme example, but that is exactly how these types of assets work. And that's why all the big boys go play in this level and this arena, is because they control the valuation. They don't require an appraiser to tell them what the valuation is. They control it by a tax statement telling them this is how much you made and this is your multiple. That concept is called a cap rate. Remember that word, go look it up. A 5% cap rate will give you a 20 times multiple on the NOI. This is the number one reason I love this space. Number 2 reason, it is truly passive. When you own a single family home or a fourplex, yes, you can get property managers in there, but you still have to worry about the taxes. You still have to worry about repairs. You have to okay them. Like, even if you get a property manager, you're still more involved in it. You've got to you've got to look at it. You've got to pay your insurance and your property tax and everything like that. When you do a syndication, the group of investors appoints someone to manage it. They're usually called GPs. They manage that asset for you and you do nothing. You literally get a deposit every single month or every single quarter, every single year, whatever it is, into your account, and your money just shows up and it's there, and you get a tax return, a K-1 saying how much you own. It is truly the most passive way to get into real estate while getting part number 3, the actual depreciation and tax benefits. When you own a REIT in a stock, you get no depreciation and tax benefits. When you own a syndication, you actually own the asset, so you get tax benefits. So not only, let's say you put $100,000 in, that's a round number. I know it's a large number, but let's just use it. You not only are you going to get let's say 20% returns, you're going to make $20,000 on the return of the property. It's truly passive. You don't have to manage it, but then you're going to be able to write off $40,000, $50,000, $60,000 in your taxes and save yourself $20,000 in taxes. You save $20,000 in taxes. You made $20,000 in the investment. You are $40,000 richer by making that investment, which is really like a 40% return if you think it that way. I love syndications. I just want to run down a rabbit hole, but I wanted you to understand, one, what that investment is and why I do so much of it. It's hard to find good syndication companies. If you want to reach out to me, my contact information is all over. I take pride in the fact that I've never missed a DM. You can DM us. We will answer. I'll introduce you to syndication companies. I own one. I'll give you the one I own. I'll also give you others. Okay. I do funds and syndications with other people, even when I own my own, because there's lots of deals out there. So I'll give you the contact there. That makes up about 40% of my real estate. The last 30%, because of the businesses I own, I usually own the commercial building that my business is housed in. I don't want to pay rent to other people, so I'll own the office buildings. I'll own where we pay rent, and that makes up about 30% of it. So that is the diversification inside my real estate holdings: syndications, commercial, residential, broken out like that. If I didn't own businesses, I would own no commercial right now. There is a large change coming to the commercial world. COVID instigated massive change. These high interest rates, the work from home policies. I don't think we know what the new status quo is after COVID. Everyone went work from home. Then we rubber band the other way and companies started demanding people come back in. Now they're loosening again. We need to figure out where that lands before I can actually invest in the asset, because honestly, I don't know where it's going to land and I don't want to take that risk. So I would not do commercial or office building unless you are the tenant. This is all of my makeup of my portfolio inside percentage form. Now, what would I change? I am in a lot of real estate because I own a mortgage company, I own a syndication company, and those deals come across my desk. Real estate agents will bring deals to me that the normal person wouldn't have because they know that I'm an investor, I'm in the space, and so I see these come across my desk. I am probably over leveraged in real estate. I'll be 100% honest. Because of that, my whole mantra at the beginning of the way I treat my stocks is to try to be my risk suppression for that because of how I operate my stocks, but I am probably overvalued in real estate. I think that real estate should probably be about 60% of people's portfolio. Liquid should be about 40. And inside that, the liquid portion, I gave you stocks, and I do a lot of stocks. There are other ways you can get inside of stocks. You can own companies, not only public, but private, like there's other investments there. But I am probably over leveraged inside of real estate, and I would tell people not to do that. So the takeaways or how this would apply to you, this is probably the most important part. First, these percentages are based on a portfolio where you have the liquidity to get into real estate. If you're 22 years old and your net worth is $5,000, 60% of your net worth is not going to be in real estate. That's not possible. Once you start getting a net worth of $100,000 or whatever you start to get there, you can start mimicking these a little bit more because you can put money in your own home, you can put money in investments, and you can start to diversify. It becomes easier to actually target a percentage portfolio. Point number 2, diversification is how you preserve wealth. It's not how you create wealth. This is the biggest lie that you have ever been told on social media. Every guru tells you to diversify. Diversification is preservation of wealth. It is not creation of wealth. Every billionaire, every multimillionaire created their wealth in one or two ways. They started a business, they hit it home on real estate, they did something to grow their net worth. While you are young and you are trying to create wealth, do not be afraid to go all into an asset that you know and trust and have knowledge in that no one else does, because that's how you create wealth. It's only after you create wealth do you want to start to diversify into real estate, crypto, stock, high yield savings account, cash, everything that we just talked about. That is when you start to diversify. I would not diversify too young. And point number 3, and one of the most important, you can get better returns than the stock market. Don't buy into the old age adage that 8 to 10% is going to grow your net worth. Once again, This kind of applies to point two. You're going to have to use the stock market and some cryptocurrency as you start to grow wealth and go all invest in yourself and businesses and knowledge so that you can grow your salary and everything. But once you get to a certain point, okay, once that net worth starts to grow, get into circles, get into communities, get into online chat rooms, get into school communities that teach you how to invest and get access to investments that can beat the stock market. It is very, very possible to get a 12, 15, 18, 22% return out in the world. Use the stock market as a security blanket of reserves, but go seek a higher return because it is completely possible with a little bit of knowledge and networking. You just have to put yourself in the right circles so you can find those opportunities because they don't mass exist like the stock market. The stock market is the easiest one to find, which is why so many people talk about it. But if you can get in the right rooms around the right people and find the right investments, go seek that investment because it's the difference between that $3 million net worth and that $40 million net worth is simply the return that you're getting. I promise you, you can do it. Follow me on social media. I talk a lot about these different things. As always, if you can hit the like, comment, share button, do anything because the more that these videos get out there, the more I can put out there. And my whole purpose is to try to grow your net worth and bring these investments to the common person so you don't have to be stuck inside the stock market. You can actually grow your net worth and create the financial freedom that you want.